Welcome to Nagendra Commerce Academy. My dear students, in this video you are going to understand how to do journal entries. Before going to understand these 5 transactions, you have to remember few logic points. Number 1, format. Journal entry format would be 5 columns are there. How many columns? 5 columns. So in these 5 columns there is a date, particulars, LF, debit column and credit column. So like this 5 columns would be there. This is the logic number 1. Number 2, what is meaning of debit, what is meaning of credit? Debit meaning is receiving or receiver or comes in. Credit side you can feel receiving opposite means what? Giving. Comes opposite means what? Goes. Receiver opposite means what? Giver. The very simple, if you understand which account comes under debit side, you can easily able to find out which comes at credit side. So this is the second logic you have to remember, students. And the third logic, always do the transactions according to business. According to business. So let us see one by one very quickly. So commencement of business means what? So any businessman want to start a business, he must start a business with cash or assets. So for example, businessman start a business. This is the commencement situation. So I said third logic, business basis understanding. So what business is receiving, that we think. So what business is receiving in this commencement situation? Business is receiving cash. How can we say cash is receiving into business? Cash received into business, how can we decide? Because business should be started by owner. Owner is outside of the business. The owner is paying to business to start a business activities. So that owner would be giving stage. That means credit side. The business what receives actually, that is receiving state. That means debit side. So hope you understand, students. So cash is receiving stage according to business. Owner is giving state according to business. So in this situation, two things we can understand is receiving cash. Owner is giving that cash. So owner is giving state. Owner's cash, no. Owner's cash nothing but capital. So capital is giving state, cash is receiving state. That's why this transaction would be cash account to debtor. Cash account to debtor. Owner is giving state. That's why owner's amount is nothing but capital. That would be credit side. The primary transaction always like these, students. Cash account debtor to capital account. If it is in the transaction, maybe asset is there which is brought by the owner, asset account debtor to capital account. The second situation, very important situation and easy situation, purchase bought goods or assets, sometimes on credit basis, sometimes on cash basis. In this second situation, there is a two cases we need to understand. So let us see one by one. Number one, cash basis. If you purchase something that comes to the business, yes or no? If you purchase something that comes to the business, So what you purchase, that comes to the business. What business do? Business has to give something to outside, who is sale to business. So debit means receiving, no? What receiving here? Assets. Asset account that are to cash account. Sometimes instead of assets, there will be purchase account. When it would become, listen carefully, very simple logic I want to tell you. If you know what you purchase, if you know what, you can write name of the asset. If you don't know what you purchase, the name of the asset or the name of the good, you can write purchase. That's it. Second one, credit basis situation. If you purchase something on credit basis, who is creditor, who is giver, that must be credit side. Credit basis means, don't forget students, person should be right. Person account should be right where the relevant location of the journal entry. So asset purchase. So generally asset purchase means what comes? Asset comes. So supposed to be assets debit side. So you did not pay amount according to business. You did not do anything. You just purchase assets. You just taken that assets into business. So who is giving that assets? Some X person, some Y person. So at the credit place you have to write that X or Y person, because they are in giving position. Giving means credit, no? Giving position. If they did not mention any asset name purchased on credit basis, you just write directly purchase account. So debit side would be asset or purchase. Credit side would be cash or person name. So just to remember this simple logic about second transaction, students. And we'll move to third situation is sold. Purchase always debit, no? Sales always credit side. So if you sell something, maybe assets or whatever, so if you sell assets or goods, so that situation is sale of the goods, sale of the assets. That may be credit basis or cash basis. Now we'll say cash basis situation. If you know exactly what you sell, for example, if you show sell furniture, sale of furniture, sale of machinery. So if you sell machinery, what you receive, you think carefully. You receive cash. You receive cash. That's why cash is debit. Sometimes if you sell the product but you did not get any amount, that is called credit basis transaction. Instead of cash, you just write person name. So debit side what would come? Cash or person name. Debit side would come cash or person name. What business is giving? What business sale, that is giving. If business is sale of machinery, machinery is giving. If the business is sale of scooter, scooter is giving. If the business is sale of building, building is giving. So what is in the position of credit side, that is giving state. So in this situation, assets are giving. If they did not mention what exactly sale in the transaction, you just write sales. That's all. Credit side would be assets or sales. Debit side would be cash or persons. This is the third situation, students. Fourth situation, that is expenses. So expenses always debit side. Expenses always debit side. Credit side what would be? Cash. That's all. So expenses, salary paid, salary accounted to cash account. Rent paid, rent accounted to cash account. Whatever paid, that name of the expense accounted to cash account. So very simple, students. For example, sometimes The losses may occur. That loss also debit. Expenses also debit. Loss also debit. So for example, depreciation on machinery. So depreciation is a loss. That loss would be debit side. Depreciation is debit side, and asset would be credit side. So depreciation account data to that concern asset. Depreciation on machinery. Depreciation account data to machinery account. So like that we can write journal entry. Fifth situation, incomes. Can we find income? If the word is like this: received, rent received, salary received, discount received, interest received. The word gives income to the business. So if the income to the business, that is giving stage, that's why income is credit side. Income is credit side. Then what would be debit? What you receiving cash. Cash comes into business. Comes means receiving. Receiving means debit. So cash account data to income account, that name. So this is the way we can understand the journal entries. Very simple we can understand. The first one, see students, cash account data to capital account, sometimes assets account data to capital account. The second situation, assets are purchased. Assets are purchased, the same assets are purchased, the same would be assets are purchased, the same on cash basis, the same on cash basis and credit basis. So credit side would be, if it is cash basis you just write cash, if it is credit basis you just write name of the person, that's all. And third situation, you just see credit side, the same, debit side cash or person. So what you understand by understanding these two transactions reverse? If purchase is debit side, sales is credit side. Cash is credit side in the purchase situation. In the sales situation, cash is debit side. So what you understand students? The second and third quite vice versa. So cash debit means in one situation, that is sales situation, cash is credit in the purchase situation. Okay. Now fourth and fifth, they are also same, quite opposite. So expenses always debit, no, incomes always credit. Expenses debit, incomes credit. If the expense is debit, cash is credit. If the income is credit, cash is debit. That's all. So this logic you just remember students. This is expenses related, this is income related. Okay, cash to capital. This is first situation, purchase or assets to cash or person. This is the second situation, cash or person to sale or asset. This is the third situation. These five situations you just understand, you can easily understand these journal entries. If you understand journal entries, this would help to prepare ledger accounts. If you understand ledger accounts, you can easily make it trial balance. If you understand trial balance, you can easily answer final accounts. So this is the basic foundation of the accountancy. Hope you understand students. In this video we are going to focus, understand the concept called trial balance. This trial balance tells you that how the account balances appear. So generally trial balances is a statement shows balances of accounts. So debit balances it will show, credit balances it will show. So debit balances, what are the things are there? There is basically debit side there will be expenses, credit side there will be incomes. In the debit side, expenses basically again classified into revenue expenses, capital expenses. Incomes also classified into revenue incomes, capital incomes. So revenue expenses again classified into factory related and office related. Factory related expenses you have to write trading account debit side. Office related expenses you have to write profit and loss account debit side. So factory items expenses you have to write trading account debit side. Office expenses you have to write profit and loss account debit side, which are revenue items that show in the debit side of the trial balance. So understand, trial balance, there is a debit side, expenses are there. In that expenses, revenue expenses also there, capital expenses also there. So in that revenue expenses, factory related expenses also there, office related expenses also there. So whatever the factory related items, you have to write a trading account to debit side. Whatever the office related items, you have to write a profit and loss account debit side. The same side of the trial balance, which is debit side, there is a capital expenses are there. So in that capital expenses, there is a fixed assets and current assets. So if you expense for buying assets like building called fixed assets, like bills payable, so goodwill, plant and machinery, furniture, these are all assets. So these assets we need to pay for that. So these assets we can say capital expenses. We are paying amount to get assets. So these assets also appear in debit side of the trial balance. So this will be shown in the fixed assets. No, we have to show it asset side of the balance sheet. Asset side of the balance sheet. So asset side we have to write this fixed and current assets. And the same way, credit side, which part is called income part, credit side, there is a two types of incomes are there. One is revenue incomes, another one capital incomes. So revenue incomes, capital incomes. So whatever the revenue income related to factory, we have to write trading account credit side. Office related incomes, we have to write profit and loss account credit side. So whatever fixed liabilities and current liabilities, we have to write so balance sheet liability side. Balance sheet liability side we have to write capital incomes. Overall we can understand that trial balance look like this. Debit side expenses, assets are there. Credit side incomes and liabilities are there. So where should write expenses, where should write incomes, where should write assets, where should write liabilities? So that must be carefully remember and record where the allocated places. So hope you understand students how trial balance appear in the question paper. Students, now we focus trial balance. It is usually comes for 2 marks. So it is very simple. So what are the things need to remember to do trial balance? So very simple students. So trial balance, there is a debit side, some items are there, some items are credit side. So these items, how you remember, how you do trial balance easily. But one small logic is there, every debit is equal to credit of the balances of the trial balance. So trial balance total debit balance, trial balance total credit balance must be equal. So that logic you just remember before going to understand what item comes which side. So here trial balance, there is a 4 basic things you have to remember. Number 1 expenses, number 2 incomes, number 3 assets, number 4 liabilities. So these expenses and assets you have to write debit side of the trial balance. You have to write debit side of the trial balance. So this incomes and liabilities you have to write credit side of the trial balance. So whatever we are going to see in this table, you have to focus this point, students. Now we'll move forward. Opening stock debit side expense, purchase expense debit side, sales is income credit side, purchase returns it is opposite to purchase, sales returns opposite to sales, capitals it is a liability related things, drawings it is opposite to capital, bank asset, building asset, debtor asset, creditors it is liability, investments asset, goodwill asset, patents asset, bills receivable asset, bills payable liability, trademark asset, wages expenses, salary expenses, discount expenses, like that. So basically you understand that expenses assets debit side, incomes liabilities credit side. So these things you understand now. So based on this you have to calculate. And one important point in trial balance, every debit is equal to credit balances. So the debit side total and the credit side total should be equal. Hope you understand, students. This is the way you can solve trial balance. Welcome to Nagendra Commerce Academy. Students, how to prepare final accounts. You know very well in the question there is a trial balance that contains expenses, assets, debit side, incomes and liabilities at credit side. So expenses may be factory items, may be office items. So whatever the factory items you have to write trading account debit side. Whatever the office items you have to write profit and loss account debit side. So this is the question you can see. And incomes may be factory items, that should be incomes should be trading account credit side. Incomes may be office items, that should be recorded in the credit side of the profit and loss account. Assets are always asset side of the balance sheet. Liabilities are always liability side of the balance sheet. And very important, so this point tells that trial balance items comes only once, whether it is trading account or profit and loss account or balance sheet. So in these three formats it comes only once. So please don't forget, students, trading account comes only once, but adjustments comes. So adjustments comes two places. One is balance sheet, another one trading or profit and loss account. So adjustments may be two places it comes, but trial balance only once. Hope you understand, students. Welcome to Nagendra Commerce Academy, students. In this video we are going to focus formats of the trading account, profit and loss account and final account, which is balance sheet. So these three accounts, these three formats, we can say final account procedure. So let us see how to solve trading account, how the format look like. So there is a particular amount, right side debit side and credit side particular amount. So there is a three columns are there. You can remember this table. You have to remember format also. So debit side, opening stock is there, so that's credit side, closing stock is there. Debit side, purchase is there, credit side, sales is there. Debit side, purchase returns you have to deduct, sales returns you have to deduct. So this returns will be, purchase returns will be credit side of the trial balance, sales returns will be debit side of the trial balance. So where the returns are debit side, that should appear into the credit side of the sales. Where the returns are appear in the credit side, that should appear in the debit side of the trading account. So like that you have to remember, students. And wages. So wages is related to factory. Factory always related to factory rent, carriage when stock comes into the factory, transport charges. So when stock is transferring from outside of the place to inside of the factory, at the time transportation charges are there. Customs duty, while exports and imports time we have to pay customs duty. It is related to stock, that is related to factory. Gas and oil requirement for the factory. Water and coal, that is also requirement for the factory. So whatever the requirements from the factory, that all comes under trading account. So factory items are related to trading account, don't forget. Production items are related to trading account. Manufacturing items are related to trading account. So students, don't forget what are the items comes to trading account. Those are related to factory, manufacturing, production and industry. So these are all items you have to write into the trading account format. So next one, also after writing all these things, we need to total both sides. You will get some extra value that you repeat both sides, then you will find the balance, carried on, brought down, like that. But in this trading account you should not write balance, brought down, carried on. You have to write only gross profit or gross loss. So when should gross profit, when should gross loss, you just remember, students. Gross loss means income is less than expense. That means this expense is more, this side is less, that is gross loss. So gross profit means income is more, loss is less. So income is more, loss is, that means expense is less. So this situation, so the gross profits will appear. Gross loss when it appear, when income is less than expense. So you have to see the table and this format, you can understand gross profit comes or gross loss. So don't write two things at a time. So once a gross profit is comes, it will not come. If the gross loss is comes, gross profit will not come. So any one thing only it will come in the trading account format. Don't write two items, students. And next one, we focus profit and loss account. Profit and loss account is related to office, company items, business items, company items, organization items. These are all items comes under profit and loss account. So salaries we are giving to employees, postage, that postage expenses what we sending from the office, stationery, what we requirement to the company, discount, sometimes we are getting discount, we are providing discount. Debit side discount means it is not at all receipt, it is a payment. Commission also payment, advertisement also payment, insurance also payment, legal expenses payment, carriage outwards also payment, office expenses payments, office rent payments, bad debts payments, like that many things will comes under payments always debit side. Payments always debit side of the profit and loss account, which is related to office, organization, companies. So these are all related to profit and loss account. And credit side, how you recognize, so if the item is received, if the item is received, rent received, commission received, interest received, discount received, whatever the item received, that always treated as a income. So income side we have to write. Income means credit side of the profit and loss account, students. So very simple, we have to remember. The same way, so there is a audit fee, traveling expenses, rent and taxes, interest, general expenses. These are all treated as a office related expenses. That's why profit and loss account to debit side. Profit and loss account to debit side. Understand, students? And next one, whatever here that is received. So that all comes under credit side of the profit and loss account. Credit side of the profit and loss account. So this is the way format of profit and loss account. And now we'll see balance sheet. So balance sheet format very simple, students. So there is two things we are recording in balance sheet: asset side, fixed assets, current assets. So these two only we are enter. So whatever the things are we are entering into the asset side, that is related to fixed assets and current assets. So machinery asset, cash, furniture asset, land, bills receivable. Bills receivable means amount has to receive from the drawers. Drawer means is a person who has to pay to the company. And debtors, what amount paid by the company to the people, they are called debtors. Goodwill, cash in hand, cash at bank, copyrights, patents, plant, closing stock, prepaid expenses. It is related to representative accounts. Prepaid insurance, outstanding income, trademark, stock, like that assets will come, students. And already you know that capital, if the drawings is there, you have to deduct from capital. If the net profit is there, you have to add. Net loss is there, you have to deduct. Net loss you have to deduct. Net profit you have to add to the capital. If the drawings is there, you have to deduct. So these things you have to remember while doing adjustment with the capital. After that, liability side, you can see creditors, bills payable, overdraft, bank loan, outstanding expenses, income received in advance, general reserves. These things mostly comes in the liability side of the balance sheet. So this is the format you have to understand. So when you do this all these things, you can see total both sides of the balance sheet, it will be equal. When all the balances are equal, you can get the full marks, 20 out of 20. Hope you understand, students. So here one important point you have to focus: net profit or net loss. Net profit or net loss. So how you get net profit or net loss? When you see this profit and loss account, sometimes we may get net profit or net loss. So here by net loss. If net loss comes, net profit will not come. If net profit come, net loss will not come. So like that any one will come. This you have to write here. So how you get net profit? When you see this gross profit and gross loss. So based on this, this will appear in the income, no, this will appear here. If it is loss, it can be appeared debit side of the profit and loss account. So in these two items only one thing will come, two will not come at a time. So listen students, very simple and easy. So this is the format, tells you that trading account, profit and loss account, balance sheet. If you write this all things with adjustments, you will get 20 out of 20. Hope you understand students. This is the format, very important. So you have to focus and make it note easily. You can understand any kind of problem easily. Welcome to Nagendra Commerce Academy. My dear students, in this video I am going to tell you how to adjust adjustments in the final accounts. So mostly expected adjustments I am giving list out in this video. You just focus, listen carefully, write your answer correctly. So just here there is the primary adjustments 99% or 100% comes in the examination closing stock. So closing stock always enter into the two sides. One is trading account credit side, second one balance sheet asset. So you know very well, in this trading account debit side you are writing opening stock to opening stock and credit side probably by closing stock. So don't forget, opening stock always debit side of the trading account, then opposite closing stock. Opening stock debit side means closing stock is credit side. So this adjustments credit side of the trading account. And second place we need to write asset side of the balance sheet. Asset side of the balance sheet. The second adjustment, very important, it comes in the examination, depreciation on fixed asset. That means furniture, machinery. So whatever the asset they will give a certain like a percentage, like 10%, sometimes they will give 5%, 20%. So how much percentage they will give? So we have to find out the depreciation value. That value is treated as a loss. So depreciation is a loss. That loss is deducting asset value. So we have to deduct loss from the asset. So it should be in the balance sheet. So that's why asset minus depreciation. Here asset minus depreciation. And that is loss, no? So that loss should be enter. That loss should be enter debit side of the profit and loss account. So depreciation is always loss. It should be entered into the debit side of the profit and loss account. Always you have to enter depreciation debit side of the profit and loss account and deduct that depreciation from the asset balance sheet side. You have to write it balance sheet side. And third one, very important, outstanding expenses. So listen students, whatever the expense is given, outstanding means you have to add. Outstanding means you have to add. So for example, outstanding salary, you have to add that outstanding to the salary. Outstanding wage, you have to add outstanding wage to the wage. So like that, the format is like that, you know very well. So for example, here wage is there, you have to add outstanding wage, then the total, right, you have to write outer column. For example, there is a salary, the outstanding salary you have to add, that you write outside column. So like that, outstanding means always you have to add, you have to add that outstanding. Prepaid means subtract. So very simple, students. Outstanding you have to add to the expenses, that outstanding expense, and balance it. That expense increase means, you just listen very simple way. So expense increase, outstanding expense, already some expenses there, this outstanding expenses increases your expense value. That means your expense increase means definitely it is a not asset, it is a liability, it is a liability. That's why you should enter into the liability side, you have to enter into the liability side. And prepaid, I just told you, prepaid means already paid. So already paid means your expense is deducting, no, so that expense always deduct, so that you treat it as expense deducting means, expenses or deducting means asset, so you have to write asset side. And fifth one, income receivable. Outstanding or receivable both are same. Income receivable means income outstanding, so both are same meaning. That's why you have to add to the income. So receivable word gives add, you have to add. So if the income is increasing, add means increasing, definitely it is not a liability, it is a asset. And income received in advance. So prepaid and this one received in advance both are same. So that's why this prepaid or income received in advance both are same. That means your income is deducting, your income is deducting. So listen students, prepaid or received in advance both are same, receivable and outstanding both are same. So if you understand any two things, you can understand remaining two things. So this advance leads or decreases your income. So when the income is decreasing, automatically that is liability. The last one, bad debts. The next one, bad debts. So students, bad debts means it is fully relevant to, don't forget, debtors. Bad debts are always related to debtors. Debtors which is shown in the debit side of the trial balance, it is asset. So this asset it is related to bad debts. So bad debts, what is bad debt? Bad debt is the amount is which is non recoverable from the bad debtors, non recoverable from the debtors. So that amount is bad debts, so that amount is loss, so that loss always debit side of the profit and loss account. So debit side of the profit and loss account because it is a loss, and that loss is deducting from the debtors. So your asset value is deducting, that's why the bad debts you have to deduct from the debtors. For example, reserve for doubtful debts, no problem, you have to deduct from the debtors. For example, only bad debts, no problem, you have to deduct from the debtors. So whatever the adjustment given as a bad debts or reserve for doubtful debts, you have to deduct from the debtors. So these adjustments are very important. Mostly out of 7 adjustments, 3-4 adjustments you will see in the examination. Hope you understand students. We'll see some special adjustments also, so after finishing this class. It may expected in the examination when paper is feeling tough. So very simple adjustment actually, these are all. So basically four adjustments I am giving here. These 4 adjustments are very simple and easy. Please pay attention, you can easy to understand these all adjustments. Let us see First one, there is a interest on creditors. Second one, interest on drawings. Third one, discount on debtors. Fourth one, discount on creditors. So what do you mean this? We just focus carefully. You know very well, capital is owner amount. Capital is owner amount. Capital is a owner amount. So this amount definitely owner take from the business. Owner takes from the business. So business always should pay to the capital to the owner. So when the business going to close, that amount should paid by the business to the owner of the business. So anyhow, this amount is capital amount is always payable amount from the business. So business pay amount this capital. In this capital there will be adding as interest. So interest on capital. Interest on capital. Already capital is payment from the business. When the business is going to close, at the time company or business should pay that capital to the owner. On that payment again interest. That means it is not at all profit. It is always loss. So interest on capital is a loss. Interest on capital is a loss. That's why this loss always profit and loss account debit side. This loss always profit and loss account debit side. So this is the loss. It should be right profit and loss account debit side. So this is increasing capital amount, right? So this interest is increasing capital amount. That's why we need to add capital plus interest on capital. So this is not at all difficulty adjustment. It is easy and simple adjustment, students. So interest on capital is increasing with the interest. So this amount is shown at balance sheet capital side, liability side. The second one we'll see drawings. So what is drawings? Owner take amount from the business. Owner take amount from the business. That means owner should pay amount to the business. He takes money from the business for personal use. Whatever the amount taken from the business for personal use is called drawings. You know very well. So this drawings is income to the business. This drawings is income to the business. In this drawings there is again interest. So in this drawing there is an interest. It is always profit. So interest on capital is a loss. Interest on drawings is a profit. So profit always where should write? Credit side of the profit and loss account. Where should write? Credit side of the profit and loss account. And it is not increasing capital. That's why it is deducting from the capital account. It is deducting from the capital account. How should we deduct? There is a capital. You have to deduct drawings. You have to deduct again interest on drawings. So this is the way we have to write into the balance sheet side, liability side. The third adjustment, discount on debtors. What is that? Discount on debtors. So debtors is a asset. Debtors is debtors. They are the assets. So they are the assets. Company is going to give discount. Company or business is going to give discount. So this discount is the debtors value is decreasing. That means asset is decreasing. Debtors value decreasing because of discount providing by the company to the debtors. Because of that reason, that asset value is decreasing. So that asset value decreasing means definitely it is not a profit, it is a loss. It is a loss. So this loss always write into the debit side of the profit and loss account, and it is deducting debtors value now, so that we have to deduct from the debtors. And fourth one, discount on creditors. So it is quite opposite to debtors. Creditors means our suppliers, company suppliers, they are giving money to the business, so they are the amount providers. So from that amount going to give us discount. So this discount is decreasing creditors amount. So creditors actually loan. Creditors actually we need to responsible source. So this amount is deducting. That means our liability is deducting. So our current liability is deducting. So this amount is deducting. That means our loan is deducting. Our loss is deducting. So that this is considered as a profit. So profit always profit and loss account to credit side. So that is deducting creditors. No, always we have to deduct from the creditors. So this is the not at all difficulty adjustments, but very easy adjustment. You just to focus, you can easy to do that. And very simple concept we need to focus now, that is how to solve percentages in the adjustments. They will give certain percentage, how to solve this. So listen carefully, students. So for example, if they give 10%, sometimes 1%, and some other percentages they will give in the examination. So we are usually doing that 2000 10% means 10 by 100. So 1010, downside 0, upside 0, you will get 200. So this is the way we are going to solve in regularly classes or many other places. But this is the trick you have to remember, how to solve percentages easily in the examination. So without pen and paper also we can do that. 10% means, please listen carefully, any number 10% means your logic is simple. Last digit of number eliminate. Last digit of number is eliminate. That is called 10%. That is 10%. So for example, to 20,000 10%. So last digit eliminated means what? Last digit eliminated means what? This one we should not consider. So what is the remaining total number? 2000. So this is the 10% of 20,000. That's all. Very simple. For example, the same question like this, 1% of 20,000. So how to solve 1%? Here you just understand last two digits eliminated. So 10% means one number is eliminated, one digit is eliminated, last two digits eliminated is helps to know 1% of the any number. So for example, the same example we take 20,000. 1%. Last two digits eliminated, no? So what do you get? 200. So 10% is 2000, 1% is 200. Like that we can solve so any percentage easy. So let us see 5%. Let us see 5% also. So how to solve 5%? Already we know that to solving 10%, the 10% we have to make it as a half. So half of the 10% is 5%. For example, 10% you will get something that you make it half. Half means by 2. So what you get? 5%, right? So this is the way you have to solve 5%. So let us take small example to solve 5% of the number 20, 20, 5%. How to solve 5%? How to solve? Generally you do 0 0 cancel, 5 1 ja, 5 2 ja, 2 1 ja, 2 1 ja. So you will get 1 rupee. You will get 1 rupee. Let us see how to do this. Another technique. So 20 rupees, 5%. Last digit is eliminated, that is 10%. Half of the 2 is a 1. Half of the 2 is a 1, that is a 5%. So what we did previous, the same logic, the same result we are getting in this logic also. So forget the last method, remember this technique. So if they ask you 10%, if you know, you can solve 5%. And last technique 20%. So 20% very easy students, double of 10%. Double of 10%. So you know very well 10%, no? For example, let us take 1000, 10%. So double means into 2, no? 10 into 2, 20. That means 20%. So how to solve 10%? Last digit you remove, you will get 100. That double you will get 200. So 20% of 1000, 200 you get. So this is the way you can solve any percentage value without using pen and paper. So you can take 17% also. How to solve 17%? You know very well 10%. You know very well 5%. You know very well 1%. This 10%, 5% you can add it. 1% plus again 1% you add it. You will get total 17%. Yes or no? 10, 5, 1, 1, 17%. So whatever the percent they ask you in the examination, you should not worry. You have to remember 1%, 10%. That's all. You can solve any kind of percentage in the examination point of view. Hope you understand students how to solve percentage techniques. Welcome to Nagendra Commerce Academy. My dear students, in this video I am going to teach you how to solve cash book type of problems. So in these problems, very easy to solve. Many students are preferring this kind of problems. But let us see, cash book means it is called as journal book as well as ledger account. So it is one of the subsidiary books as well as it records. My dear students, in this video you can understand how to solve cash book related problems. In your examination, mostly you can see triple column cash book. So what do you mean triple column? Triple column means 3 columns are mainly you are focusing in cash book. Number 1, cash. Number 2, bank and discount columns. This is very important. So you need to focus when need to write cash column, when need to write bank column, when need to write discount column. So this point we need to understand. So cash book generally there is a 2 parts. So cash book it is T shape. So debit side there will be, credit side there will be, debit side there will be receipts, credit side there will be payments. You have to start with 2 and credit side you have to start with buy. So this is actually cash book format. So it is a T shape. Debit side you have to write receipts, credit side you have to write payments. So this is a cash book, this is a debit part, this is credit part. So debit part what should we write? We have to write receipts. And credit side what should be write? We have to write payments. So how can you recognize this is the receipt, this is the payment? So receipt in the sense it must be comes to business. So what business receives, that is receipts. What business paid, that is payment. So students, please pay attention. Such an important and easy concept, triple column cash book. So before going to understand triple column cash book, so let us see what is discount. So generally discount is a amount deducting from the actual amount. So for example, trader paid to the amount to another trader at the time, they need to provide trade discount. And when the amount is deducting by the businessman to the customer, that amount is cash discount. So trade discount is related to business to trader. Cash discount is related to business to customer. If the customer is getting discount, that is cash discount. If the trader is getting discount, that is trade discount. So in this discount, sometimes discount allowed by customer, sometimes discount received from the trader. So in this case, so what is discount allowed, what is discount received? So trade discount should not enter into the books. Only we need to consider cash discount. So what is discount received? What is discount allowed? Let us focus. So discount received, when we get discount received, when we purchase something from the supplier, at the time supplier allow some discount, that discount according to our business, discount received, that is benefited to business, And next one, discount allowed when we sell to customer, at the time we are allowing our business allowing to customer, that is discount allowed. So this is happening when sales. So listen, very simple. Discount allowed is happening sales time. Discount received is happening purchase time. So that's why discount allowed is debit side, we need to enter amount. Discount received, credit side, we need to enter that amount. So please listen carefully. So now we move to cash transactions. Need to enter into the cash book only. So what should be entered? We should enter only cash transactions. Should not enter credit transactions. So what do you mean credit transactions? Whether sale or purchase from the business, it must be credit basis, means without amount paid or received from the supplier or the customer. So that kind of transactions are credit transactions. So these transactions need not to enter. Only cash transactions only entered. So it is also cash book also called as cash account. So debit side we have to write receipts, credit side we have to write payments. So please listen carefully, no need to enter credit transactions. So generally we know that there is a three types of cash books are there. Number one, simple cash book, double column cash book, triple column cash book. Simple column cash book means the primary column is cash. Double column cash book means the primary columns are cash and discount. Triple column cash book means the primary columns are three, triple, cash, discount and bank. Understand? Now it is ledger posting of journal entries. Very important point, students. So in this triple column cash book, it records cash and bank transactions only. It records cash and bank transactions only. Non-cash transactions or items are eliminated. Please don't write non-cash, no cash involvement transactions. And sometimes contra entries are will appear in the triple column cash book. So what is contra entry? So it recorded in triple column cash book. Contra entry means the entry which appears in cash and bank columns of triple column cash book. Triple column cash book. The entry which appears in cash and bank columns of triple column cash book. So this is a very important point, students. So contra entries, how can we understand? So basically there are four types of contra entries are there in this video. So there is cash deposited into bank, and next one cash withdrawn from the bank for office use, cash paid into bank, cash received from bank. So these four transactions indicating contra entry. How can we decide these transactions are contra entry? For example, cash deposited into bank means there is a bank is there, cash is there. So bank is receiver, cash is payment, cash goes out. According to rules of the double entry, so bank is receiving, cash is goes out. Cash withdrawn from bank for office use, the same way bank is giver, cash is receiving. Cash paid into bank, bank is receiving, cash is payment. Cash received from bank, bank is giver, cash is received. So like that, when the transactions read carefully, you can understand where the bank and cash accounts are involved, that transactions consider as a contra entries. And the next contra entry is check deposited next to date. So what we receive check from some person that is deposited into next to date. Immediately if you deposit, that is you have to treat it as a receipt and enter into the bank column of the triple column cash book debit side. So but in this case, check what you receive previous day that you deposit into next date. So what you receive today that deposited into next date, that is contra entry. And next one, when we opening up a bank account, so at the time we need to write contra entry. So if you want to open a bank account like saving account, you need to deposit some amount into bank, so that amount cash deposited into bank. So what we discussed just now, contra entries, that entries are given as A, B, C, D and E, F. So these all transactions related to contra entry, students. So I just give a small logic how to understand this all contra entries easy way. If you see first contra entry A and B and C, D, E, F, these 6 contra entries. So it tells only two basic things. Number one, you just see A, B, F, E. The 4 kind of contra entries tells the same kind of general entry. So cash deposited into bank, cash paid into bank, opening up bank account. So these are all tells that our amount is deposited into bank, payment into bank, paid into bank. That means when paid into bank, so bank is receiving, that's why bank is debit side. Our cash is goes from the business, that is credit side. So what I given A, B, F, E, these four you observe carefully, it tells the basic journal entry, bank account data to cash account. And if you observe C and D, so cash withdrawn from bank, cash received from bank, cash taken from the bank. So the meaning is same. That means cash received means cash is comes into business debit side. So cash comes from the bank, banker is a giver, that is credit side. So thus this way we can understand this logic. This just these two transactions tells that how to enter contra entry situation in the triple column cashback. Let us see small example according to this contra entry in contra entry situations. So for example, this is the triple column cashback. So for example, this is debit side, credit side, triple column cash book. So this is a cash bank discount, cash bank discount. So listen carefully, bank is debit side in this transaction, bank is debit side. So bank is debit side, no, that's why you have to write debit side. Where should write? Bank column, debit side, bank column. So bank debit side is there, no, you have to write debit side, bank column. What should write? What amount is given in the problem, that you write. So here bank you write bank place, bank column you write amount, that means you have to write debit side to cash, to cash. The same thing you have to write cash credit side, no, so you have to write cash column, cash column credit side. So here cash amount you are writing, you have to write by bank. So very simple students, bank debit side, no, write amount in bank column, cash credit side, no, write amount in cash column credit side. So where the entry is there in the journal, that you write that side of the account, triple column cashback, very simple. So if you see second example also very easy. So for example, cash debit side, so debit side cash column, you have to write amount here. So when the amount is entered into the cash column, you have to write to bank. So here bank is credit side, you have to enter credit column of the bank, that is this side, credit side. So you have to start with by cash. So if you write bank column, you have to write cash. If you write cash column, you have to write bank. So where the amount is writing, that column name you should not write. So cash I am writing, so I will write bank. Bank I am writing, I will write cash. So this contra entry indicating with C in the column of ledger folio. Ledger folio column you have to write C. So everything will be easy. So hope you understand students contra entries. So let us see a small format, then we'll close the session. So this is the triple column format. So in this format you just observe, this is the debit part. How many columns are there? 1 2 3 4 5 6. So 3 columns are main columns, are there triple columns are there. These 3 are triple columns, and the remaining 3 are basic things, date, particulars, LF. So what you write debit side 6 columns, the same you repeat credit side 6 columns. So 6 debit side, credit side also 6. So this is the logic you have to remember. Triple column means don't write wrong format. So debit side 6 columns, credit side also 6 columns. So let us see contra entry situation. So your bank, your cash written, debit side 2 cash. So credit side, debit side 2 cash written, amount is bank column. Understand students? Debit side cash written, so amount is bank column. And when come to credit side, bank written amount in cash column. So understand? So bank means cash means bank. So please understand this journal entries already I told you previous session. So this is the way we can understand. And one more important point that so after writing the correct way debit side and credit side of the triple column in both main columns cash and bank situations, so here after completing all the items transactions enter into the triple column, so we need to balance both sides. So for example, if the debit side is more in bank column 10,000, so that same thing you have to write in the bank column of the credit side also. Where is the amount is lacking or deduct less amount, that amount you have to find out 10,000 minus. So what is payment amount that you deduct, you will get carry down amount. Understand students? The same way in cash column also you have to do it. But in discount columns, don't total. Discount columns, please don't total. You just write individual total, debit side separate, credit side separate. So this is the way you have to do the triple column cash book easily. So one more small point I want to tell you about triple column. So how to solve easily? Please listen carefully. Triple column, what should write credit side, what should write debit side. So when the transaction is giving the exact meaning of payment, you have to write credit side of the triple column. And if the word is showing in the transaction like paid, salary paid, rent paid, commission paid, like that, you have to write credit side. And purchased from customers, sorry to say purchased from suppliers, so at the time our amount is paid, no, so we have to write credit side. And expenses, whatever the expenses given in the transaction that indicating payment, so payment means credit side. So this is the way we can understand what items comes under credit side of the triple column. And debit side we can say receipts. Received word tells debit side. So received cash, received, received telling the debit side of the triple column. And incomes, that means receipts means incomes. So incomes also tells that debit side. And sales, when you sell amount is comes to the business. Withdraw means amount comes to the business. Opening cash or bank account, opening balances of cash and bank, that also last year closing balance. Last year closing balance tells that this year opening balance, that also comes under debit side of the triple column. So this is the important point students. So how can we find out which items comes which side? And one more important point, that where should write, whether bank column or cash column. So if the check is there, the word check is there, we have to write bank column. Otherwise, other situations we can write cash column. And one important note that check received from person name, check received from person, that should not write bank column, students, because bank is not giving check, one person is giving check to the business, so that's why it is treated as a cash receipt, you have to enter into the debit side of the triple column. So this is also a very very important point. Hope you understand. So these keywords you have to memorize in our mind. You can easily solve the triple column cash book. Welcome to Nagendra Commerce Academy. My dear students, in this video I am going to teach you how to solve what students feel very difficulty, the concept called bank reconciliation statement. Such a statement is required when the balances are not at all equal in the both books called cash book and passbook. For example, if you take a cash from the bank, so that you must enter into your cash book as well as passbook. So in this format, you have to write particulars, amount to amount. So this format indicating bank reconciliation statement. So first they are giving book. So which book they are giving, you just to focus whether cash book or passbook. So whatever the book balance they are given, you have to write first item answer is outer column of the amount, and after that we have to write and less add and less. So in add, what are the items are there, 1 2 like that, in less 1 2 like that items will come. So whatever the add amounts are there, that you write inner column, that you total here, and add you will get some answer, and less whatever you get, you have to write inner column, the total you write outer column, then you have to subtract, you will get certain answer, that is called cash book balance given, no, that's why you will get passbook balance. If the passbook balance is given, you will get cash book balance. So like that the format is like this. So now we'll see how to solve bank reconciliation statement. So there is only two things you have to remember. Number one, what book given. Number two, what balance given. Number one, what book given. Number two, what balance given. Based on that you can solve easily. If the balance is favorable, you have to focus opposite book. If the balance is unfavorable, you have to focus same book. So for example, the cases given here, mostly check issued, check deposited, definitely it comes in the examination. Bank charges, some transactions recorded in bank only, some are recorded in cash book only. So like that it comes. So now you have to understand favorable, unfavorable. So how can we say favorable balance? Favorable means receipt. Favorable means receipt. Unfavorable means payments. Unfavorable means payments. If the amount is received to the business through the cash book or passbook, that is favorable. If the amount is paid from the business, that is unfavorable. So understand students, what book given, what balance is given, which book given, which balance is given, Based on that, you can solve the bank reconciliation statement. Let us see very simple way. I will tell very simple way. For example, cash book given, cash book balance given, cash book balance given, balance is favorable. Cash book balance given, balance is favorable. Check issued means how we think opposite book. Cash book given, that balance also favorable. We need to think like a opposite book. Check issued, definitely that amount is deducted, that is treated as a payment. So payment. So payment means cash book amount deducting, passbook amount is here amount is deducting, here amount is increasing. So opposite book is a passbook. So here amount is increasing, that's why it should be right add. It should be right as a add place. So like that, check deposited. Check deposited means our amount is increasing. When we deposit our check into bank, definitely our amount is shown in the passbook receipt side, that is credit side of the passbook. So here credit side means favorable, our amount is increasing, our amount is increasing. But here deposited means check deposited means our amount is increasing in the cash book, but that is not appear in the passbook, that means amount is deducting. So cash book given, so passbook deducting, no, that's why less. Bank only, cash only, these are all will be based on situation. We can solve the bank reconciliation statement problems. So very simple students. Once again remember, what book given, what book given, what balance given. If it is favorable, opposite book. If it is unfavorable, same book. Hope you understand. My dear students, in this video, I am going to teach you how to solve bank reconciliation statement. This is very important concept for 10 marks. Before understanding bank reconciliation statement, why bank reconciliation statement is needed? When cash book and passbook, their balances are not equal, whether debit balance or credit balances, at the time the bank reconciliation statement is required. This statement is prepared by banker. So after understanding why bank reconciliation statement is required, we need to focus how to solve bank reconciliation statement. So there are two books are there. One is cash book, another one passbook. Cash book balance, debit side balance sometimes, and sometimes credit side balance, and sometimes passbook side debit side balance, sometimes credit side balance. So when the balance is debit side of the cash book, that is reflecting to credit side of the passbook. When the balance is credit side of the cash book, that is reflecting to debit side of the passbook. So this logic we need to understand. So that means we are always writing transactions amount debit side, which means our amount is favorable. We are used to write credit side some transactions, our balance or amount, which means unfavorable. So favorable means receipts, unfavorable means payments. So our balance, whether it is receipt or payment, you just remember this logic, receipt or payment. Then we can understand, then we can conclude to solve bank reconciliation statement easily. So let us try to focus how to do this bank reconciliation statement. So there is a cases given here, but listen carefully how to solve this kind of statements. So when the balance is favorable, we need to think like a opposite book logic. If the balance is unfavorable, we think like a same book logic. For example, our book is cash book. Our book is cash book. So balance is favorable. Our book is cash book and balance is favorable. At the time, we need to focus opposite book called pass book. Do you understand, students? For example, our book is pass book, balance is favorable, then we need to think logic called cash book. So like that, what kind of book given, how to solve it? Let us see. For example, if the book is given cash book, if cash book is given, so we need to find passbook balance. So first read the question carefully. If the balances are mismatched, the payment is or receipt is not made on expected date, it happened after expected date, so this statement is very essential. So let us see, our book is cash book. Now our book is cash book. So let us see, our book is cash book and balance is favorable. Favorable balance means, don't forget, favorable balance means cash book debit side balance, passbook credit side balance. So understand, cash book debit side means what? Receipts. Passbook credit side means what? That is also receipt. So our balance is favorable when balances are shown debit side of the cash book and credit side of the passbook. So this is the important point you have to memorize, students. So now our book is cash book, our balance is favorable, so we need to think opposite book called passbook. See, very simple. Read the first case. What is here? Check issued, check issued but not paid, or check paid but not yet collected. The case given like this in your question paper. So you just think, you just imagine how our balance is happening in the cash book or passbook. So when check is issued or paid, immediately our amount is deducting. See here, students, our amount is deducting. So deducting means minus. Deducting means minus. So our amount is deducting, that is, our book is cash book, our balance is favorable balance, so our opposite book is passbook. So according to passbook, cash book balance is deducted by reading this case, so automatically passbook balance is not yet deducted. That means passbook balance is increased. So cash book balance is decreased, passbook balance is increased. Our book is cash book, our balance is favorable balance, but we need to find passbook. So passbook balance, how to find it? Very simple. According to this case, check issued means cash amount is deducting, cash book amount is deducting, passbook amount is increasing. That means this one we need to add into the format. We need to add. Add means plus symbol. So let us see second case, check deposited but not collected. Check deposited but not collected. So very simple. Check deposited means we are getting check from some person that we are taking to hand and deposit into bank. That amount is immediately we are increasing in our cash book. So increasing means add up plus. So that amount is not reflecting in passbook. So at that time the amount is deducting. The amount is not more than cash book. So in this case, our book is cash book, our balance is favorable balance, our opposite book is passbook. Passbook, what happened in this case? Amount is deducting. Amount is deducting. That means we need to subtract this. Less, less side we need to write this item. So like that, coming to third one, passbook only. So some transactions are, some items are recorded only passbook. So only passbook means where the transaction is affecting only passbook only it is affecting. So that means whether bank charge means definitely our amount is deducting in passbook, so there will be less amount. So that is not known by cash book, that's why it is increasing. So we need to subtract. Why? Our book is cash book, our book is cash book, our balance is favorable balance, our logic is opposite book, that is passbook. What happening in passbook because of this transaction? Deducting. So that we need to less this item. And coming to next one, interest on loan, the same situation. So when we take a loan from the bank, so there will be interest they are taking or charging. So that amount is very less in our account. So that means our book is cash book, our balance is favorable. We need to think like opposite book called passbook. So in that passbook, because of this transaction, interest on loan, there is a deducting. So that we need to deduct this item. And coming to fourth case, cash book only, the quite opposite to passbook only, that is cash book only. That means when item is affecting whether directly deposited by the customer or wrongly enter into the passbook, so whatever the things which are only affecting in the cash book, not recording in the passbook, at the time what is going on? For example, we are taking a interest received from a customer, so that amount is not recorded in the passbook. That means interest on investment means what happening? For example, interest on investment, this is only recorded in the cash book, for example. So in this case, our amount is increasing. Our amount is increasing. It is affect only cash book, no? That means cash book amount is increasing. Passbook, there is no effect. That means here increasing. So in this book there is a decreasing. So that we need to subtract, because our book is cash book, our balance is favorable balance, our opposite book is passbook. So that according to passbook, interest on investment is recorded in only cash book. That is the reason we need to deduct. We need to deduct from the format. So this is the way we can solve the bank reconciliation statement. Last point I am going to tell you that you just focus. The cases are same, the situations are same, the effect is everything is same, but you need to think one wonderful point, that is, for example, our book is cash book, our balance is unfavorable. So then you need to think like a cash book case only. That means check issued means cash deducting, now we have to deduct. Check deposit means cash increasing, now we have to add up. Passbook only bank charges means we are adding in more cash, no, in cash book we need to add. Interest on loan, cash book there is a increasing balance, we need to add. Interest on investment there is a decreasing, we need to deduct. So like that, if the balance is unfavorable, please focus this point. If the balance is unfavorable, think like a think like a same book. Think like a same book. If the balance is favorable, think like opposite book. This logic very important. Please students, focus this logic and do the problems you can understand easily. Hope you understand concept. If you understand, give a like symbol and subscribe my channel. Thank you. Students, in this question related to opening entry for 2 marks, it may ask you in the general proper. So how to write this one? Assets are always debit side, liabilities are credit side. So all assets you have to write debit side and liabilities you have to write credit side. If the amount is not at all equal, so that the remaining amount should be considered as a capital. So you will find the capital. How you get capital? Assets minus liabilities. Assets minus liabilities. Assets total amount, liabilities total amount. You find out and deduct from that, you will get capital. That capital you have to write here. So this is the way you have to solve the opening entry. How many columns are there in opening entry? 5 columns. What are the columns? Date, particulars, LF, debit to credit. So these 5 columns you just remember. Assets all debit side, liabilities all credit side. If the balance is not equal, you find the difference, that is capital. You have to write capital place credit side of the opening entry. Hope you understand students. Minus liabilities. So what are the assets are there? Generally, basically these assets will come in the examination. Cash, bank, bills receivable, debtors, stock, furniture, land and building, investments, machinery, trademarks, goodwill, copyrights, patents. And the liability side, bank loan, bank overdraft, bills payable, creditors, general reserve. These things will come usually in the examination. So please, welcome to Nagendra Commerce Academy. Students, in this video we are going to focus subsidiary books. This is very important for 5 marks in accounts part. So in this video there is totally 4 credit basis books are there. That 4 books are purchase book, purchase returns book, sales returns book. So how can we recognize purchase book? When the word is giving like this, purchase or bought, purchase or bought. So where the words appear like this in the transaction, purchase or bought, you can consider purchase book. And sales, where the sold, the word showing like this, sold, so you can recognize as a sales book. So how can we recognize purchase returns? Listen carefully. How can you recognize sales returns? So you just listen carefully, you can understand this purchase returns and sales. So purchase returns, how can you understand? You purchased from the supplier. You purchased from the supplier. You means business. Business purchased from the supplier. That product is not good. So that purchase product is not good. That's why you are returning to the supplier. That returning goods is called purchase returns. That returning is called purchase returns. The same way, sales returns. You made a sale to the customer. That sale product is not at all good. That customer is returning to the business. So because of sale, that goods are returning to the business, this is called sales returns. Now you can understand that purchase returns, because of supplier it happens. Sales returns, because of customer it happens. It is related to business. Hope you understand, students. So for example, if you purchase that product is not good, you are returning to supplier, at that time you have to consider that transaction is purchase returns related transactions. Okay, now we'll see how the formats is. In this purchase returns book or sales returns book, one column which is different, that is debit note. What is that? Debit note. In sales returns, one column which is credit note. So these things will be changing in both books. Purchase you will see invoice number, sales you will see invoice number. This is inward invoice. In sales, that is outward invoice. So like that, in these four books, one column will be different. So that we focus, then it will be easy. So how many columns are there in these four books? 5 columns. So what are the columns? Date common, particulars common, and LF is common, and invoice. Last one, amount. How many columns are there? 5 columns. So these 5 columns will comes in the 4 formats of the books. So let us focus here. Here, prepare purchase book from the following. There is a question in the page number 81, some other books. So purchase book how look like? So you purchase from Sekhar, you purchase from Syam, goods purchased from Sekhar. The transactions like that. Goods purchased from Sekhar, goods purchased from Syam, goods purchased from Karthik, goods purchased from Naresh. Like the transactions will appear in the question. You just write names of the person. So what should be write? Names. Only name we have to write, and amount. Name and amount very very important, students. In this format you have to write name and amount. Name, amount. That amount you have to total. You will get easily 5 marks. In purchase book, one more problem is there. So many problems are there, very simple it is. So you just focus. Date you can write easily. Amount you can write easily. That name you can write. That numbers, invoice numbers or debit note numbers, you have to write based on book. So the total you have to write, then you will get 5 marks. So this is the 4 books which is related to credit transactions. Very very important point, students. One important point, that is, please don't consider cash related items. If the cash is mentioned in the transaction, please don't consider in these 4 subsidiary books: purchase book, sales book, purchase returns book, sales returns book. So please don't consider in this book, because cash items need to record in the cash book only. Cash items record in the cash book only. Already you know that. So please don't write cash items in the subsidiary books. of 4 credit basis transactions. Only you have to record these 4 books. Hope you understand, students. So this is the format, you don't forget. Welcome to Nagendra Commerce Academy. In this video we are going to understand how to solve personal account. How to solve personal account. Before going to understand this personal account, we need to focus few basic things you can solve very easily. So let us first one, format. Second one, what items comes debit side, what items comes credit side. Third one, is there any discount is there, that we have to find. Rest of things as a cash payment. Fourth one, we need to find out which items comes which side. So this way we have to understand, then move forward. So for this I am going to tell you some basic things. Number one, format. So how many are there? Debit side, one, date, particulars, journal folio, amount. So 4 things are there. Debit side 4, credit side also 4. So don't forget, students, personal account format is total 8 columns, debit side 4 columns, credit side 4 columns. First one is clear. And second one, debit side what should write, credit side what should write. Debit side, in the transaction, if the word is like this, to or due from, if the words like this in the transaction, you have to write debit side. If the words is like that, transaction from or due to, you have to write credit side. So please remember this logic. You can understand how to solve personal account. So once again, debit side you have to write to or due from. Credit side you have to write from or due to. So based on these words you have to write which side it comes, which side it will not come. And now move to format with answer. So here dates are there, you have to write dates. Amount you have to write dates, amount. It will be easy. And sales, balance brought down. These items how it comes, no? So balance brought down, how it comes? Balance brought down, it comes when the balance is like this. It comes debit side, it comes credit side. When it comes debit side, if the balance is like this, amount due from, amount due from. If the amount due from, it comes debit side. If the amount due to, it comes credit side. Listen, students, if the amount due from, it comes debit side of the personal account. If the amount due to, it comes credit side of the personal account. This point you remember. So based on that, you can easily find out the where the amount appear. The first one. Second one, already I told you. To means you have to write debit side. From means you have to write credit side. And one more point, to debit side, from credit side, and by also credit side. Given by, purchased by, like that. So by, from you have to write credit side, only to you have to write debit side. Based on this logic, you can solve personal account. And last important point, that if debit amount is greater than credit amount, you have to write credit side is less, no, you have to write credit side by balance brought down, by balance carried on. If the debit is less than credit side less, no, you have to write to balance carried on, to balance carried on. This one case, students. And one more point, that if they are giving like this, settlement with 10% discount, settlement with 10% discount, how to solve that? Let us take small example. Here the amount is 38,000 debit side, credit side very less amount, comparatively 12,000 very less. So how you find out that? Sales returns are 6,000, cash is 6,000, 8,000, 6,000, bank is 12,000. So these three things only will appear in the credit side. So how much total? 26,000. So how much? 26,000 is the credit side. So debit side is 38, credit side is 26. So this 38,000 more, credit side is very less, no, we have to write credit side. So how much they are giving discount as a settlement? They are giving settlement as a 10%. So how we solve the 10%? We should not take 38,000, we should not take 26,000. What should we take? What is the difference? The difference is 12,000. Difference is 12,000. So from this 12,000 we have to find the discount. So how to solve this 12,000? Already you know very well. So 12,000. How to solve discount? 10% means last digit you have to eliminate. How much you will get? 1200. What is this 1200? 1200 is the 10% discount. So you just observe here, discount is the 1200. And remaining, so from that 12,000, from the 12,000, 1200 is the discount. So remaining amount 10,800 is the cash, right? So this cash we have to write here. So do you understand, students, how you solve these two items? So we should not take 38,000, we should not take this 26,000, we should not take that. We should take the difference called 12,000 only. We should take, from that only we have to settle with the discount and cash. So this is the discount, this is the discount, this is the total remaining amount, this is the cash. So cash and discount we have to find. So this is the way we have to solve the personal account. Hope you understand, students. Format, don't forget, 4 columns, debit side, credit side. Don't forget heading, don't forget debit credit column, debit credit side parts. So then you have to do the answer without mistake. So when the settlement is given, then only you have to solve the discount. If there is no settlement, no need to solve discount. You have to write directly balance carried on, balance carried on. If it is debit sometimes, it is credit sometimes. Hope you understand, students. This is the